Okay, party people in the house. I don't think I went over how to correctly use some of these indicators that I've introduced. So I'm going to do that now so it can help improve trading so people know what to look for and how to actually use and how to trade, right? So starting off, let's get these moving averages correct first off, right? So let's just act like this isn't here for now. And let's act like this isn't here for now. The moving averages, just to show you. Let's move this back a little bit too. And one last thing, I'm going to take off the screen just to simplify it and just use the stuff that we kind of know. This basic indicator just shows yesterday's high and yesterday's low, which is a very kind of important thing to know, but I'll get into that, if not this video, another video. But we're going to go over these moving averages and the session volume profile. So we're going to come up to the indicators and we're going to type in 10 and 1, the numeral 10 and 1 different moving averages, right? So we go there, we type that, and that will bring up the 10 and 1 different moving averages. I already have it here. So let's go to the cogwheel. In case I haven't showed this before, we go to cogwheels, we're going to go to inputs, right? Inputs, we're going to put the check in the box. It can be up here at the top. It could be 1, 2, 3. I just have them down here, 7, 8, 9, for whatever reason. Okay, so the box, put the check in the box. We're going to select EMA, and we're going to select 100, and we're going to select high, right? Then we're going to go check in the box, another EMA, and we're going to select 100, and we're going to select low, right? So that will give you these two lines. You select whatever color you want. I use the white and blue, and it gives us these moving averages. When price is under these moving averages, we are only looking for sells. Do not look for buys if you're under this moving average. That would be really not wise, as you can see. Do not look for buys. And the way you look for a sell if it's under is you wait for price to come up and hit the line and close under it like so, and then you would get in on that candle. So let me just highlight these few hits here. Sorry about that. Right? So as we can see, why does it keep doing that? As you can see, we wait. If we wait, price comes back up, hits it. This is the 15-minute chart. It hits it. Once it hits here, you see this is a nice candle that engulfed this one. We wait for that to close, and we get in on this. We get in after the close of this candle. Stop loss is at the top. I'm going to show you. We're going to put our stop loss at the top of that pin, and then we get in on the, wait for this candle to close, and we get in. And as you see, it rides down. Let's say you missed this. If you missed this opportunity, that's why it's doing it. We would wait for another opportunity for price to come up and hit this line, which is right here. Price comes back up. We know the market is still bearish. It's still going down because price is under these two. Wait till it comes up, closes below it. It hits the line, closes below it, and then we get in on the next candle. So what we would have did is, excuse me, price comes, hits that, we put our stop loss is at the top of this candle. We wait for this candle to close, and we get in here, and then we ride it down. Let's say you missed that. Let's say you missed this one. Here's another one. It doesn't exactly hit the line, so some people might not take this trade, like I might not have taken it. But still, we know that this candle engulfs this one. That's called an engulfing candle, which is a signal to go down, for price to go down. And then therefore, you get in after this candle, and as you can see, stop loss would be here. Again, just to demonstrate, your stop loss is at the top of the wick, so that in case price reverses, we don't lose a whole lot. But as you can see, that's a good signal. We're under these moving averages, and price drops down, right? So that's just the moving averages. Let's see. Let's see if we can get some bullish examples. Here's some bullish examples. And take away this. Again, price look at this. So price comes up. You see, it hits this. So that already is a little fishy. Where you see price doesn't perfectly hit it, and then it doesn't bounce off of it. It kind of exceeded it a little. So we're not taking that. It's still in an indecision. Plus, this red candle is not closing below the blue line by a lot. We want a strong close. This is a weak close. And just by it closing like the way it did, we can see what happens next is price comes up and closes above it. Still not really a strong close. But what we do want to see is something like these aren't even good examples. These aren't even good examples. Let's get a better example. This is a great example here because and let me get this out the way also. Price comes up a little bit. This is not a strong close. This is not a strong close. This is a strong close with rejection. So we wait for this candle to close. We put our stop loss down here, and we get in on the next candle, which would have been this. Came down, but then as you see, it eventually goes up. That's moving, that's using the moving average, right? Now, this is trading smart. We know the market is bullish if it closes above this. You see it closes above, still comes, it doesn't close below it. Market is still bullish. Look, even here, it doesn't close below it. It's still fighting to stay bullish. These are certain examples. But now, to show you session volume profile, which is another validator of direction. Check this out. We're going to do it like this. Let's go in the Wayback Machine. Check this out. Okay, here's the signal. Session volume indicator is showing you, first of all, this indicator is showing you where the move is going to start from. This is where it's letting you know where these lines are at. I have two session volume indicators here. That's why I'm showing two lines. Usually it's just one. But this white line is showing you where the move is going to start from. Whether it goes up or down, that's the work we have to do. But it's telling us whether it goes up or down, it's starting from here. It is starting from here. Now let's check this out. So we already have a clue of where price is going because we have these two moving averages, right? And we know that if price is above these moving averages, price is most likely to go up. So we know the move is starting here. It's starting here. So being that we have the moving averages, my bias is bullish. So we're going to tick through it, right? So if you haven't already put your order in, down here, if you haven't already put your order in down here, let's say you didn't put your order in. Guess what? It's too late. Don't chase it. You see this long candle? If it was a little short candle like here, I'd be like, cool. But this long candle right here, you can't chase that. It's, you know how you get to the train station and you miss the train and your train is pulling out of the station, right? Just like a real train, you can't chase that train because you ain't going to catch it. You got to wait for another train. So once it gets like too far away from this line, just don't chase the trade because we're going to end up getting burned. Let me show you. See? Look at that. Then you get in here. Let's say you chased it. You got in here. You see this big long candle and you're like, oh, okay, cool. I caught something. But then that very next candle comes down and just crashes your dreams. Don't chase it. If you can't get it down here, you got to wait. You have to wait till it comes back here because a lot of times there's multiple chances you can catch it again. Let's see. Let's tick and see. These wicks are telling you that it's trying to go back down. The bears are fighting, but let's see. Let's say you stayed in. You got in here, you stayed in, and now you're back up. Look at that. You know what this is called? It's called an engulfing candle, meaning this candle totally engulfs this candle. And it's letting you know that the bears have taken control of the market and the market most likely will reverse. Let's see. Yep, it's reversing. It's reversing. It's reversing. But look, the train is coming back to the station. This is the station. If you have your order waiting here, let's say this is your order. Let's say that's your order. You missed the train this way. But guess what? There's another train coming. And you just wait. Boom. It comes back to the station. Yeah, it goes a little bit past it, but that's all right. That's all right. Because you wait and the train is back in the station. And guess what? You're in a much better position now than catching it up here. Now you're here. You just got to wait. You got to be patient. Don't get into trades up here and up here. I know what it looks like, but you're going to get caught. You're going to get burnt. You're going to get burnt. 9 times out of 10, you're going to get burnt. Now, there's a way to catch these and maybe not get burnt, but I'll show you that in a second. Well, look, you caught the train again. You caught it here, and look, it's coming back above the moving averages, just letting you know you did a good catch because it came back just to come back a little bit more. Let's do this again. Your order's here. The train came back. You don't have to put your order in here. You could, or you don't have to. But here, look at this. This candle does not close strongly outside of the moving averages, meaning it might not go down. Let's see. Closes inside of the moving averages. And this is the train station. You caught the train. First stop here. Looks good. The direction you want it to go, right? You're still on the train. Now you put your stop loss here. Let's move it. We're putting our stop loss here because we're on the train and we don't want to lose money. So we're hoping the train takes us to where we want to go, which is up in this case. On the train's moving slow, but it's still where we want it to go. Between these two moving averages, we caught it at the train station. Our stop loss is here. We're going to keep going. Stronger close outside of these moving averages, stronger, right? So it's a good idea. So just by these little bodies, it's showing you there's not a lot of volume. There's not a lot of volume yet. So let's say you got in on this candle. This is where your profit is. So let's move our stop loss to break even. So that way we don't lose any money, but we don't gain any money either, but we're at break even and at least you're not going to lose a lot of money. All right, so we moved it to break even. Still on the train. We're still looking for a nice strong close above these moving averages to really confirm our direction. And this is where we currently are. This is where we currently are. So this is real time now. This is where we are. But just saying that, this is how we take a good guess of a trade. You can't get in up here, guys. We can't get in up here. If you want to get in up here, there's a way to get in up here. But it's not just watching on this chart. Let's take a different example real quick. Okay. Let's say right here. Right here. So again, the session volume indicator is showing us that whatever is going to happen, it's going to happen right here at this line. This is where we want to put our trades in. Whether it's going up or down, we want our trade to be here. Now, as you can see, we are under the moving average. We are under these moving averages. We're under that. So we might be thinking it's going to go down. And if we went according to this candle, it closed under it. Let's say we got in after this candle, we put our stop loss here. We got in and it rolled down. And we rolled down all the way down here, which is good. That's a nice little chunk of change right there. Let's move it. Let's say we did this. Let's say we did this trade. Let's just say, for the sake of argument, we did this trade. Let's go. Okay, this candle closed below it, but it's not really a strong candle. As you can see, there's a wick at the top and a wick at the bottom, meaning the market's still kind of indecisive. Let's go to the next candle. This candle is a good candle because this candle closed below the moving averages, and then this candle even solidified it even more. Nice wick and a nice long body going under the moving averages, and then we have this, the session volume profile, which is saying that a move was going to start here. There is going to be volume at this level. So our stop loss is here, and now we're moving in the direction down, right? Let's go to the next candle. Boom, right there. Right there is reason to be like, okay, it's heading back towards the volume line of session volume profile. So we might want to, we're on the 15-minute. We jump down to the 5-minute to see what that looks like. And on the 5-minute, even though this is our stop loss, we got in here. Let's go back to the 15-minute just to see where we got in. We got in at the close of this candle. So now on the 5-minute, we see we're back at the break even and it's approaching that. I would wait for maybe one more candle and I might take a small loss. Let's see. That's too small, so I might wait one more candle. That right there, and being that it's at the session volume line, I might be like, okay, this might be another move forming. But real quick, before I do all that, I meant to show you the other moving average that is going to help us. You put in one more moving average, and this moving average is going to be a SMA. Make that a 44, and I made mine yellow because this is also going to help us, right? So as you can see, that yellow line, that yellow line is also showing us which side price is going to be on. So being that price closed just a little bit above it, it's not strong, but still it's like caution for me. So let's keep going. Next candle. All right, so when price is closing within the moving averages, you got to be careful because it's not closing below it and it's not closing above it. Again, indecision. Wick at the bottom, wick at the top. Okay, let's just say we're out of this trade. This is a stop even or whatever, or an exit. We'll take that out. Next candle. Still, we are around where we think a move is happening. Volume is here at this line. So me, I saw this, I would have been like, yep, that's a nice signal. It bounced even off that yellow 44 moving average. I'm putting my stop loss here because I see prices below the blue and white moving average, and I'm jumping in after this candle for a sell. But watch this. Right? I'm in profit now. I'm like, yay, yay, profit. Uh-oh, come right back. Right? Because I'm watching the 5 minute now because I already, but just to go back a little bit, guys, sorry. Yes, this 15 minute, I would have got in at the end of this 15 minute or whatever. Right? Check this out. Ah, this is why I watched the 15 minute. 5 is good for entry, but 15 minute you need for direction. And yes, I I probably would have came in on a sell on this candle, but I quickly would have got stopped out. And when it's this strong candle, guess what? Guess what this candle is again? This is an engulfing candle on the 15 minute, which means go back to the 5 minute. Okay, we don't have an engulfing on the 5 minute. Maybe that was an early example. But an engulfing candle on a 15 minute is stronger than an engulfing candle on the 5 minute. And this right here is saying that market is probably going to reverse because look, we're here. This is the session volume profile saying a move is going to happen here. And then look, it closed very well above this yellow moving average, the 44. It closed strongly above it, right? Even though we're not above these two yet, but this right here, this is the train station. They're saying a train is going to leave from here. Whether it goes up or down, it's going to leave from here. Press play. Again, the train is now moving. It's moving even though it didn't get above this on the 15 minute. But let's see where it is on the 5 minute. On the 5 minute, it's above it. On the 5 minute, it's well above the blue and white and it's well above the yellow. So on the 15 minute, we would have got in after the close of this engulfing candle. We move our stop loss at the bottom of this wick. This is our stop loss. We jumped in right here. We jumped in at the close of this engulfing candle. And now we're in a small profit on the 5 minute. Let's tick another 5 minutes. Boom. Profit is going. The train has left the station. The train is trying to get above. So right now, we got in here, right? Let's move our stop loss to a break even. So in case the train comes back to the station, we are in a break even. Train is going. It's leaving. It's leaving the station. We got in here. Look where the train is at now. Look where the train is at. This is a 15-minute chart. Usually, this is an indication that we might be coming back down. This type of candle. Because price came all the way up here and then came all the way back down and closed here. And usually, that's an indication to tighten my stop loss. So let's do that. We're going to tighten our stop loss, put it under the last down wick. We were here, but here will be some profit if price comes back here. Right? Check this out. The train is like, nah. The market is going to keep going. We're above, well above the blue and white now. These are 15-minute candles now. 15-minute candles. Good profit right now. Good profit. Still above. Right? And then boom. We see this. Move that stop loss up. This looks like a flat bottom candle. There's a tiny wick there, but it's the best flat bottom candle we got. Right? And we've tightened our stop loss. We're in good profit because remember, we got in down here. I'm just going to give another one just to show. We got in here. And now our stop loss is here. That's good profit right here between these two. Right? So let's keep going. Boom. Why do we tighten our stop loss? Because what is this? This is an engulfing candle. It engulfs the body of this. So that means be careful. Market could reverse. But did it reverse? No, it didn't. It did not. And again, another indication that the market could reverse. So when we see that, guess what do? We move our stop loss to the next stable point, and it would be this. Why is it this? Because this is a strong candle. It was like the bull's last push up, right? Next candle, still going. Still going. Good profit here. And then boom. What is that? Another engulfing candle. We're going to move our stop loss up. Not up here, but right here. On the top of this wick here. Because I'm going to also show you, this is also a re-entry point. This is for when you miss the train, but I'm going to show you how to catch that. So you're not trying to jump on the train here when it's all the way up there. Okay? Engulfing candle dictates that it might be a reversal. Let's see. This is our new stop loss. We're in profit, but let's see. Price came down a little, jumped back up a little. Again, we can already tell that price is getting exhausted. It really wants to come down, but the bulls keep pushing it up. Let's see. Yep. Coming down. And yep, let's hit our stop loss. We're out of the trade. We're out of the trade, and then it fakes us out and goes back up. Let's say we're out of the trade. Let's see what it did. Yep. We're definitely out of the trade at that point. But that's all right. We're not greedy. Because guess what? Price is still bullish. We made a little bit of money, and now it's time to just take a breather. But guess what? It doesn't mean price is coming all the way back down. It doesn't necessarily mean that. But let's just see. So it's just ranging, meaning it's just going from left to right now. It's just ranging, and then right there, right there, it's showing you. And then you see it closes below. It's under this. Once it closed below this yellow to 44 moving average, then we kind of know. We kind of know that price is getting ready to change. So it's under the yellow, even though it had, at this point, let's just move it back a little bit. Once it closed under this yellow, right here, once it closed under that, we kind of know it's reversing. And then look, the train, the train station has changed. It's saying, okay, there's a train leaving from here now. So we're out of that trade, right? We took our profit. Let's disappear that. We took our profit, and now the train is saying there's a new train leaving from there. But do we want to catch that train? Because price is still above these two, meaning the market is still bullish. So let's see how it goes. Price is still bullish, but yes, now we get a close under these two moving averages. We already got the close here, already telling you the market was changing direction. This is how I used that 44, right? And then this is almost confirmation. This candle closes below the blue line. We get a slight retest, and then the next candle after that is coming back down, right? The next station is here, for at least for the time being. But I would wait. I would not do a sell trade from here just yet. But if we do a sell, it would have to be from up here. And this is where things, right, so now they're letting us know this is another move here. But just saying all of this to say, we're only taking trades that are in proximity to session volume profile and these indicators. Now, let me just show you real quick. Um, I'm just looking at something real quick. All right, let me get off of that real quick. I want to show you guys what happens when you miss the move. Okay, we're back. We're back on this move. We're back at this train station. We're back at this train station right here. Let's say, here's the train station. Let's say you missed the train. Price is here by the time you decide to get on the train, right? Let me show you something. 15-minute chart. Price is already here. Let me show you how we catch the train that already left. So it's already here. We go down to the 5-minute. And on the 5-minute, we look for a wick on the 5-minute. Here's a wick on the 5-minute. We're going to put our trade at the top of this wick. This is how we catch the train that already left the station, right? So once price comes back here, we're in the trade. We're going to put our stop loss. We're going to put it right here because here's a nice flat bottom that price should not come back and hit. Should not, right? So now, let's say we're on the 15-minute. Watch the 15-minute. We missed, the train station is here. We missed it there, but we see this wick. We drop down to the 5, and the 5 is showing us a wick right there. And let's press play and see what happens. Boom. Price came back and hit that. It hit that. It hit that wick. So let's say we're in the trade from here. Let's say we're in the trade from here. So that train you missed, you happen to catch it at another stop. So now, you missed the train initially on the 15-minute. You missed it. It's too late because the train station is here. It's too late. But you dropped down to the 5-minute and you saw this wick. You saw this wick here. You saw that wick right there. And what wicks show you is that price could come back to this point, and it did with this red candle. It came, it tapped that same point. See that? That's the top there, and that's the bottom there. That's how you get in a trade that you missed. You don't get back in on the top. You wait for it to come back and hit those bottom wicks. And then let me show you something else. So check it out. You got in here, but let's say you even missed that. Look, there's another wick here. Look at that. Let's say you missed this one. You're going to move and you're going to put an order on the top of this wick because you're like, damn, I missed the other chance too, right? Check this out. It doesn't always happen, but there's a good chance it could happen. This is where you get back in, right? Train is leaving the station. Train is left. Right? But check it out. If price doesn't come back here, there's another wick right here on the 5-minute. You can come back here. And this is how you catch the train that you missed. Right? Let's see. If it doesn't come back, you find another wick. Look at this. Look at this wick here and this bottom wick here. Let's move our entry to this wick. But we never chase the top. Here's another wick. And you can see this would have been a wick. This is another wick. Let's see. Just totally bypassing that wick. And sometimes it's too late because look at the moving averages. When they're sloping up like this, that's showing strong momentum. You do not want to chase the top when it's like that because you will get disappointed. Right? But here's another wick. Okay, that one we got tapped in. We got tapped in. It even went past it, but look at where it went. Look at where it went. If we were patient, it went back to this wick. Look at where it went. And this is where we could still catch the train. Check it. See that? And let's say it came down. It barely touched it. But once you get this, what is this? Engulfing candle. Once you get an engulfing candle, that's showing a direction change. And that's what it did. Five-minute engulfing is not as strong as a 15-minute engulfing, but nevertheless, it's still an engulfing. And boom. We caught the train. If we didn't catch it on this tap, we waited till after this engulfing, and that's a signal. These are signals that we have to look for. This engulfing is an candle. This candle engulfed the whole body of this candle. That's a signal. As soon as this closes, oh shoot, engulfing candle, let me move my trade up here. Boom, and that's what you did. You did that, and then boom, again. And then if you have your other ADR indicator I gave you, you see price comes up here, hits it, rejects it. To me, that's saying get out the trade. Or sometimes not, because you see these are still strong. So maybe I'll move my stop loss up. This is kind of tight. Maybe I'll move it up here. But honestly, I might just get out the trade. But you just make your own decisions. But these are showing exit points right here. Exits and entries. Real quick. And it's still going up. Coming back down. But look, these are still showing you it's bullish. So we are not taking sells in this territory. We are not taking sells. When these moving, if price is still above these, you do not look for sells. You don't even, you're just looking for other buy opportunities. Not until price crosses this yellow moving average, which is the 44 right there. There's a close. Now we want to start looking for sell opportunities, but on what time chart? The 15-minute, not the 5. 15-minute, price is still here. Right here we took profit, let's just say, and we're out of the trade, but price is still above these. We're just looking for opportunities to get back in the trade. And I would say right here is one. The top of this wick right here. Price might come here and bounce. Let's see. And yes, it did. See what I'm saying? Yep, but then it came back down because we're in a supply zone, guys. And that's why price is just like playing around over here. ChatGPT tells you how to mark these zones. You see, there's no train station anymore up here. So that's already telling you that wherever move happened from this train station down here, train is pretty much at its destination. As you can see by this 1/3 ADR line, it's already came up here, closed under it. Price, I mean, the move might be done. It might be done. This is how you use these indicators. Okay, a new station just appeared, and then it disappeared. So you got to wait for it, the station to be solid and not disappearing. And then also, okay, 15-minute chart, Yellow moving average of 44. Price closed under it. Strongly. Strongly. Here's the train station. Boom. Then check this out. I'm gonna go back one. Let me go back one. I know it's a long video, but I gotta show this because there's things to know about these wicks. Okay, we're still bullish, right? You're like, still bullish. You probably took profit already. Oh, you see we're at a train station. You see price closed below that train station, but still above this 44. So we're gonna start looking for a signal to go short. And it's right there. Boom. Price closed strongly below this. Strongly, right? Meaning the train left the station again, going down. How do we catch this train? I'm showing you how. Look at this wick right here. Look at that wick right there. Let's move this wick. Our entry is here now. We already missed the train. The train is down here. But there's a chance it might come back to this wick. And that's how we could get back in to go down. Let's see what it looks like on the 5-minute. On the 5-minute, it's right there. And look, on the 5-minute, we're below the blue, the white, and the yellow, which is a good sign for a change in direction. But let's go back to the 15. We put our entry at the end of this wick. These wicks, I call them kissing wicks. They like to kiss sometimes. What's going to happen? Next candle. Boom. Wick comes back up. Kisses this. Your stop loss is here already because this was where the move started from. 15-minute wicks are good for stop losses. So we go back one candle again. We're going to go back one candle. Right? We're here. So we're like, we put our entry here, our stop loss here. And then we wait for price to come back to this wick. Let me zoom in a little bit more. We're waiting for price. It's going to come back to this wick. It might exceed it, but we're going to wait for it to hit this wick here. Yes. Okay, give it to Sembi. Okay, go give it to Sembi. I'm sorry about that. Boom. Here we go. Look. Price came, wick came up, kissed this one, went a little past it, but our stop loss is here. Our stop loss is here. On the 5-minute, we are below everything. We're below everything on the 5-minute. I'm going back to the 15. And then next candle, please. Boom. We're in profit past this already. Boom. Next 15-minute candle. Train left the station. We managed to get the train here because this wick came back up and hit it. So we're down here in profit. Let's go. Boom. Strong close. And now on the 15, we are below the yellow, the white, and the blue moving average. We are below that. Next candle. Green candle like this on the 15. Could be a reversal. What do? We go back to the 5 to see what it looks like. Is that an engulfing candle? No, it is not. No, it is not. Let's go back to the 15. But we're going to tighten our stop loss. Our stop loss was here. Our entry is here. Our stop loss is here. We go back above the next strong wick. This is our stop loss now. So if price comes back here, we got profit because we entered here. It's not going to be a big profit, but some profit is better than no profit. Boom. Price went back down. Look at that. More profit. Stronger close below all of the moving averages. Right here, look at that green. Came back up. What does it look like on the 5-minute? It's it's pretty much an engulfing, but they're the same. I think this is called like a tweezer bottom or something like that in terminology. But let's see what it looks like on the 5-minute. 5-minute, it's not an engulfing candle, but what it is, you see this wick here? It could touch this wick and head back down. Let's see. But still, I would move my stop loss here. Wick came up, hit it. Another train station is forming, but it doesn't form. Again, let's say you wanted to continue. That's another wick point, and then boom, we're out of the trade. We're out of the trade. Let's see what it looks like on the 15. Yep, on the 15, we're out of the trade. And now when it starts going back and forth like this, it's pretty much going back and forth. But let's say if you kept your stop loss here, which is what I tend to do, some people know, I just leave it there because I know there's a lot more to give. And look, price still going down. Because this is the fake out right here, folks. It'll fake you out, but as long as you have a stop loss where you're still in profit, it's all right. It's all right. And then, boom. Price still kind of going down. Look at that. Another train station formed, but just doing this to show you guys how you use these moving averages with that session volume indicator. And then, of course, we know what that came out to be because I think this is leading into that other example. But real quick, just showing you how we can make smart guesses. It's all right to make a guess of which way you think the market is going. It's all right to make a mistake. But let's do a smart mistake. Look for the train station. Look where the moving averages is. If price is below this moving averages, especially on the 15, we're going down. The 15-minute time chart should be where we start from. Let's make smart guesses, right? Um, I wanted to show something else, but I think I'm gonna cut this video short. But I also wanted to show, I showed you how when the train, when you miss that train coming out the station, look at this, there's another example right here. A bearish example of the train missing the station. Just real quick, guys. Look, you missed this or you missed this. Train left the station. Not the best example, but anyway, train left the station. Look at this wick here. I have to get these out the way just to show you. Price did not come back up and kiss this wick, but it did come back up and kiss this wick. And this wick would have been better to go with because it's a wick in the direction we're looking for. We're looking for a down direction, and that's what we got. If we'd have put we missed this train, but there was a chance to get back on the train. All right, I'm stopping this video. It's an hour. That's stupid long. Sorry about that, but I just had to make this to show you guys. Um, yeah, so let's do smart trades. If price is above these moving averages, we are only looking for buys. We're not looking for sells. If you look for a sell, you're going to be disappointed. You need a signal. The only signal for a sell is these type of wicks, either engulfing, this like an engulfing on the 15-minute, or something strong closing under a moving average. Like, but if we're above this, don't look for sells at all. Don't look for sells at all. Look for sells like if it gets caught in the middle, something like that. That's when we look for sells. All right? Know which side of the trade to be on by using your moving averages. I'll drop another video another time with ChatGPT stuff, which also can help us determine what we're looking for. But let's do smart trades, guys.